Analyze US30 for this week. Let's start with the daily time frame. Actually, the weekly. So the first thing you want to do is basically top-down analysis. You want to identify the supply and demand zones from the top to the bottom, right? So on the weekly time frame, you could see US30 was bullish. Then we broke this weekly trend line. So this would be our valid weekly supply. I have weekly supply and demand color coded. And then this would be weekly demand. A daily time frame. Previously we had an uptrend, right? Market making high highs, high lows. At this point, we broke that trend and we created a daily supply right here. So this is daily supply nested in weekly supply. Now we had previous daily supply zones on the daily demand zones on the way up, but most of them have been mitigated. This was the only zone that was fresh, original, untouched, which the market just recently reacted from. Now this right here is daily supply, this right here is daily demand, this is the range. Now we have to consider we're in a weekly downtrend, so overall we want to consider taking shots, right, with the highest time frame we're analyzing. Now yes, the market did react off this daily demand, and we could get potentially a pullback, because if this is an impulse, maybe this could be the pullback to continue lower. So just looking at this range, this would be the next valid daily supply right here. So when it comes to the daily time frame, this is where we would look to sell to hopefully expect the market to remove this daily demand right here. So now we're on the 4-hour. We could see the market reacted off of this 4-hour demand nested in the daily demand. I'll just mark this out. Okay. So on the 4-hour time frame, we have this downtrend. This would be the most recent trend line. That I don't consider this trend line broken as yet, because we need an entire 4-hour candle to close on the other side, right? This would be the most recent 4-hour supply. This could have been considered 4-hour supply, but there was too many candles in this area. So I always take the 4-hour supply with the least candles in the area, right? So in this scenario, we could see the market tapped into the 4-hour supply. So now we're within this daily demand / 4-hour demand and this 4-hour supply. Now, if this 4-hour supply is removed, then we could consider longs, even though it may be a little counter trend from the higher time frame. But we could consider longs up to this daily supply and then consider shorts. Now, once this 4-hour supply remains intact, we could consider shorts to continue down. Let's go to the 1-hour. Now, before we analyze the 1-hour, let me just point out some trades that we took that was successful from the 1-hour time frame. We took this last week from this 1-hour supply right here, and we entered short right here. Prior to that, we took a short from this 1-hour supply right here, and we entered right here. 1-hour time frame is our entry time frame. And we also took a shot from this 1-hour zone right here, which was 1-hour and 4-hour. We entered right here, right? All of this was sent in the free Telegram group. So we know what's going on the 4 hour, daily, weekly, and the 1 hour is our entry time frame. So if we had to consider taking a trade on the 1 hour time frame, where would we consider taking a trade? Now, this 4 hour zone right here, as long as it's still valid, we could map out the 1 hour zones nested in the 4 hour. So this would be 1 hour zone nested in the 4 hour right here. And this would be a 1 hour zone nested in a 4 hour. That's still valid, right? So let me just edit this to make it only on the 4 hour time frame. That's the point. So we could just have a look at a 1 hour. Okay, so we have 1 hour supply, 1 hour supply, both valid for shots as long as the 4 hour is still valid. And then we also have this 1 hour demand if we were to consider counter trend, right? Because once this trend line is broken, then we would have a 4 hour demand area right here. This would be the 4 hour demand from here to here, which would means we have a 1 hour demand inside of a 4 hour demand, which is high probability. So at the beginning of this week, I would consider taking shots at this supply, 1 hour supply, at this 1 hour supply, as long as the 4 hour is still valid. And if this 1 hour supply is removed or this 1 hour supply is removed, then we could consider shots at this 1 hour demand, right? So simply put, I do believe the market is going to continue shorting, right? This would be a high probability area to short. This zone has been tested twice, so it's not as high of a probability. And if we had to consider longs, this would be a high probability area to go long. But we want to go short. This would be medium. Usually I would like to enter on the 1 hour time frame, but let's say the market already reacted and we want to get in on a lower time frame, we could look to the 15-minute. So once the market presents a valid 15-minute supply zone on the way down, then we could consider. We do have one on the 5-minute right here, because this would be 5-minute confirmation after reacting off a 1-minute zone. I mean, a 1 hour zone. So this could be considered as a scalp, but the lower the time frame, the lower the probability. So that would be, if we're entering a trade based on this 1 hour supply, this would be 5-minute confirmation. If you didn't already get in here, then this would be 5-minute confirmation. But personally, I would prefer to enter here at this 1 hour supply, as long as the trade is still valid, or this 1 hour demand nested in 4 hour demand. And this zone has already been tested twice, so that lowers the probability. So that's my analysis for Monday. This is Friday, so we have Monday. This is Tuesday, so that's my analysis. Let's see what the outcome is going to be. I'm more leaning towards shots, even though we just tapped into daily demand. Supply is still in control, right? And if this shot doesn't work out, then the next best area would be daily supply up here. This is the 4 hour.